Started. Welcome everybody. This is the Thursday evening trading Viper trading webinar. If you're here to learn about trading the futures markets using the Viper tools, you're absolutely in the right place. First, we got to get our standard disclaimer out of the way. Let's knock that down so we can get straight away onto some trades, which I know is the reason everybody's here tonight. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading rooms, are to be construed as investment or trading advice, and of course everybody in here does know that you do trade at your own sole discretion. All right, let's get right over here to some something fun that I set up here for us all to watch. Yeah, Havad, we might show that in the morning. He's asking about the indicator thing. Well, let's do that in the morning. If I had kind of a little bit of a different agenda here, but if you could remind us in the room, we'll pull that up and show it, okay? That's cool. Just table that for the morning. That's cool with you. I went ahead and threw a little sim trade on here for us to manage together as a team. We've done this in the past where after hours we will put some trades on, and I want to collectively manage this as a group. We're going to take votes on what to do with the targets and stops. Let's start with the targets. Let's see here. What are we going to do? Okay, we're short. We're short YM, and we got short. I got short a little bit ago just so we could have something to share and trade collectively as a team in here. And this is YM. I am short 2 contracts from the rollover just when it was coming through the mid-band here. We got into it short, which is a little bit of a late entry too, right? Because you see that the top of the range, the short actually set up in here, right? So actually, technically, I got in a little bit late, but it's okay. Are you short for real, Ed? Okay, cool. All right, well, let's go ahead and manage this. I got to get some targets in and some stops, and let's take some votes on where to put those. All right, so we've got a couple of swings here. We're going to be buying it back because we sold it short. So let's go ahead and put in a buy order. How many of you want to? I got to put 2 in, right? So I could put them like this. Let me show you a couple ideas on where to buy it back on the 2 contracts. We could do something like that. Let's call that tight. I could go even tighter. I could tighten them up like this. Swing 1, swing 2. Everybody sees why I put them there, right? Now we could go looser if we think it's going to roll and break down. And we could do, so this would be a T vote. A vote for T would be tight. So we got just a couple ticks inside of this swing for contract 1 and a couple ticks inside of the lower swing for 2. That's T for tight. L for looser would be to go outside of the swings like this. This would be in the event we get some runners. So we'll fade this swing down here. By the way, if you're fairly new to trading, fade means you, in the short side, you come inside where the swing is. So you're fading it. You're coming inside of it to fill, covering one of the short contracts. So let's take a vote, team. T for tight, which has them up closer, up in here, right, inside that swing, or L for looser. Whatever the team vote is, that's what we'll leave on the chart itself, and we'll track it tonight and see what it does. T for tighter, up closer to the swings, so you're inside of here, and you're inside of here. So it would be 1, 2. L would be your vote for a looser swing. So in other words, you have it here, you're fading this bottom one, and this would be your runner. So you're outside of the range completely. So you're looking for a runner. T for tighter, L for looser. We'll give you 15 seconds. Take a quick vote. All right, we're weighing in here. We got 2 T's, 3 T's, 4 T's, 5, 6 T's. We got 1 L, 2 L, 3 L's. Wow, a lot of T's. All right, right now we got a small handful of L's and a ton of T's. All right, you T's are winning out. UTs are winning out. So, all right, the tight vote won. The tight vote won. So what that means, we're going to drag them up. We're going to put the first tight one right there. The second tight one right there. Good. The team has spoken. All right. So if we bip down here and check this swing, this tighter swing, you can see there's a little swing right here. Hit it twice. Here bounced, here bounced. If it checks that one more time by the wick of a candle or two here, or 2 ticks above it, we will get filled and one contract will be gone. All right? Okay? And then if we come down and check this swing right here, it will take out contract number 2. Now, we got to get a stop in. We got 2 contracts, 2 lots, so we got a buy back stop. Let's get a buy stop in here. Now, we're also going to do a tight and a loose one vote here. Only we're going to go A and B. I'll show you the choices. A is you leave it just slightly above where your trade entry was, so that if it comes back up to here and hits it and goes slightly negative, you would still stay in it, but you would take a small loss. Let's call that A. B, oh, and there's 2. There's 2. You got to put 2 on. Remember to do that, right? Now, B would be tighter, where you put your buy stops inside of where you got in, so that even if it comes back to get you in here, you still make a profit. Okay, so you're short from here. Okay, it's coming down. It might get our first target there. It's coming right down to it. Let's blow it up a little bit so we can see what we're doing. All you voters for the tight targets, you might get a pop here. 3 more ticks. Okay, so take the vote. A, above the entry level. B, below the entry level. You got 10 seconds. Hit an A or a B. A or a B. Where are we putting the stops on this short trade on YM? Where are the stops? Boom. Okay, we're out of 1. We're out of 1. See, it got us? Got your tight target. We're out of 1 contract. Okay, so we got to dial the stops back to 1 real quick here. Let's go back to 1. Taking the votes. A. A lot of A's. B is B. A lot of B's. Ooh, this is close. A lot of A's, a lot of B's. It's almost tied. You can't see that? David D. Hey, welcome, David. So we had 2, for those of you coming in late, we had 2 contracts short. Now you can see the one left here from 18,771. And we already peeled one off. We had one here. We were fading this 50 swing by 2 ticks. It just filled it, just wicked it at 52. The tight stop proponents wanted to fade this swing as well. So we're here at 743 for this next target, just inside 4 ticks inside the swing at 39. So if we bip down through 50 and go another 7 ticks, it'll fill that second target. Hey, David D., welcome. Now, I'll tell you what you could do. And let me take a third vote on C, a C level here for your trailing stop. If you didn't want to leave it this loose and give all this back all the way up, you could put one just above here. That's it. So the question then becomes, how much money do you want to give back? Right now you're up 105, okay, and you're sitting right on the support level here. If it comes all the way back to 66, you will give up 16 of your hard-earned 20 ticks. C would be to put it right here. Right there. Or even tighter. Now you're breaking 50. How many want to go tighter? You want to go be tick? How many want to drag that target out of the way? Vote now, yes or no. Move it, leave it. M, move it. L, leave it. You want to take it out of the way here? Move it, leave it. A lot of M's. A lot of M's coming in there. All right. All right, so you can see what we're doing here. For those of you that are new, and there's a ton of people are still coming in here. Okay, so this is YM. It's $5 tech instrument. It's the mini Dow futures contract. Okay, and we're trading it after hours. We threw a little sim trade on here so we could kind of play it together with an actual trade that's in live data on the market. Okay, we were in a trading range here. You can see support is down here, and resistance is up here. So I got in late. I got in late on this. The actual trade entries are rollovers at the top. right? So this was the actual entries. This is where I should have gotten in. But by the time I got in, I didn't get until just above the mid-band, getting filled at 71. We had 2 contracts on. We peeled one off at this swing that got filled just a minute ago at 52. Okay, it left us with 1. We have a trailing stop here. So what we have to do for the last contract, and this is actually what we're trying to do here now, this is after hours in sim, but we're actually trying to show how you would manage your trades in the market. Right? We've done this a few times before with other markets in the after hours, and you get a chance to see, you know, how you might want to do this when you're faced with this, say, tomorrow morning. Or we have a lot of folks, to be honest with you, to be quite honest with you, we have traders all over the world that use our trading system. Netherlands, all over Europe, different parts of the world. And so they're trading currencies in the European session. They're trading all sorts of things. So what I'm showing you is the methodology works on different instruments in different time zones. As far as the entry techniques and the trail stops and the targets, that all stays the same. It doesn't really matter what you're trading. Oh, you can't see the bottom of the chart? Here, let me clean this up. There's some complaints that they can't see the whole chart. How's that? Is that better? No, that's not a high energy box up there, Doug. I just drew that box up there showing that was the top of its trading range for tonight. And that if you wanted to trade the range, you could be shorting up here. And that I got in late. I didn't get in until it came down through the mid-band. So in actuality, the short trades were up here. And you can clearly see that there's a couple of support levels as we analyze this trade together as a team, that this swing right here was what we faded on the first out. Okay, see that? And then the second support level on the lower part of the edge of this little trading zone is actually right down in here. And so that's why we've kind of gone back and forth. And do we pull this up into here? In other words, just to be clear, what we're saying is, do we think this level is going to hold, and is it going to bounce? These are trade-offs you make in real time in real markets. Yes, it's coming right to it. How many you want to drag it out of the way and see if it breaks? So the way you can play this is if you're trying to catch a runner, and this is the way we do this in real time, in the room. Okay, you're in a runner and it's coming down to the bottom of this. It's going to do a couple of things. It's going to bip through it and come back up. It can sit right on the swing and come right back up. And the way you do it is you continue to box the move in as you catch the runner. Now you see where this, I want to show you something real quick on this trailing stop, and I use this all the time. Okay, so this is a good little tip for you. Can you see this little line 6 right here? And the stealth line, this little sneaky snake sort of stealth line sneaking its way down here? You see how those two are kind of right next to each other? When you hear numbers in the room, can you see those? Right here, I'm circling it with my cursor. See line 6? This little thin line right here, and then see this little bit thicker stealth line? That's stealth right there, sort of snaky looking one. I use those a lot for stops. I use those two lines a lot for trailing stops, a lot. When I want to move them around, I'll either go, depending on the price action, I'll go slightly inside of them for tighter, right? I'll go slightly above them for a little bit looser. Because what I'm thinking here, and just to sort of do this in real time in terms of the way I'm looking at this, is that we came down here. Now see it bouncing? See it bouncing? Right to support. And what I'm sort of thinking is that if we want to keep a runner on, by the way, you tight voters, all you tight voters, we would be out right now. Everybody that typed in T for tight when we did the tight targets and stops, if you recall, I think we had it sitting somewhere in here. Okay, so for you tight voters, we'd already be out of this. If it comes way back in our face, you could definitely laugh, have a little chuckle on us. Oh, this is line 2. I'm sorry. I'm wrong. James, thanks for correcting me. The lines go as follows. 1, 2, 3, 4, 5, 6, 7, 8. 6 is up here. I was wrong. See, when you're long and the market's moving up, I generally use stealth in line 6 on an up, long, bouncing, uptrending move. This is actually technically line 2, yes. But those lines I do. We can always get back in. I want to take my money and go off to Walmart and do some shopping. This is crowdfunding. crowd voting. That's right, David D. Crowd voting. And for the tight voters, you'd already be out. Now, what I'm thinking here is that if it does bounce, and the reason I selected this area for the particular stop at this time is that I'm thinking it was good. If it comes up into here, it should stay underneath here. And theoretically, if it did, and it might not even do that at all, of course, it should do something like that. So whenever you hear things in the room to the effect of tight stops would be here and loose stops would be there, that's what that is. Line 2 is right here, Joe K. Right here. See this thin little line? Here, let me trace it with my cursor. See this thin little line right here? This thin line like that? That's line 2. Okay? And the stealth is this line right here. This red sort of sneaky looking line. Line 6 is actually up here. This is line 6. Up here. See it? This thin little line. 7, 8. So 8's the very top. 1's the very bottom. All right, now we might break the support level. Notice how we did not get much of a bounce here. Now, what I would suggest, although you could make the case that the support is somewhere located between 39 and 43. See, it's checking the upper 43 part of it, and you can make the case also, of course, that there's another swing. So that's another thing for those of you that are new and visiting. We got a lot of people still coming in on the winter open house here. If you are visiting us, welcome, welcome. We're trying our best to let you get a full Viper immersion experience, coming to training webinars, coming to the live room, and getting to see what we do here. Now, one thing I want to say about support and resistance, and there's a few misconceptions about this. It's healthy to think of support and resistance as areas, and many of you, if you've been with us for a long time, you've heard me say this many times before. In other words, can you see where this market came down into here and it hit 43, hit 43, hit 40, hit 39? So when we say, you might hear something in the room to the effect of YM has support down there in that 40 area. And what we're saying is that it has found support down there several times before. 1, 2, 3, 4, yes? But we have to call out an area so everybody kind of knows where that is. But in reality, you can see that we're actually talking about an area, right? It's an area. We're just using a number. All right, now how many of you want to take the stops? It's coming up here again. Let's see where it's going to check. A very tight stop. I'll just draw it in here for you. I'm not going to take it there, but I would show you right now an extremely tight stop on this trade would be closing above that bar right there, getting you out. In fact, if I dragged it down, I would be out right now. Let's see if our theoretical thinking here in terms of finding resistance is going to hold, or it's going to bip through. Let's see what it does here. It's just wick in line 2. This trade could be a 500-point winner with trail big swings. Well, after, during the day I wouldn't balk at that big number, but after hours I don't know because the volume is really low. And tell you what, let's scan the markets while we're watching this. I'm going to tuck this in the corner. And when we talk about trading nominally sized accounts, does everybody know what we meant by that? When we say the term nominally sized accounts, does everybody know what I'm the title of the webinar? Yeah, smaller accounts. Yeah, smaller accounts. Generally, that would be an account funded with, say, less than $5,000. NASDAQ setting up a short, Carl? Okay, let's drag NASI down. Yeah, scan some. If you got your thing up, scan some charts. Let's scan some charts together and let's see what's setting up here. Let's take a look at NASDAQ. Carl is saying that a short trade is setting up in NASDAQ. So let me get a NASI chart. Stand by. Oh, might get our stop coming up. Let's see if this little swing holds. I wouldn't. Here again, if you had a stop at this line right here, you would already be out. And we did, for you tight voters, if you recall, our initial target on the tight boat was right here. Oh, we're locking up. Oh, no. Oh, no, Big Joe. just went white on our charts. Oh no, that's not good. Yeah, the room's going to be open tomorrow. I don't think Veterans Day is it a bank holiday? Anybody? Do you know? I think the markets are open. Let me check Forex Factory and see what she says about that. I'm pretty sure that the cash markets are open. Anybody know for sure? Is it a bank holiday? Does anybody know? Wells Fargo is closed. Local banks are closed. Banks are closed, but the markets are open. Banks and bonds. Oh, we're back. Oh, okay. Carl G, that Nazi chart threw my everything into a tailspin here. Ooh, still trying to load. All right, yeah, tomorrow's Friday, November 11th. It says bank holiday. But there is consumer sentiment numbers at 7 o'clock, and futures market are open. I believe the cash markets are still open. So yeah, we're gonna have the room. There'll definitely be a live room tomorrow, no question about it. Yeah, we'll be in there trading the markets, definitely. That Nazi chart is locked up. See, my got a spinning top here. I can't move anything. Stand by. All locked up. It's almost low. It's done. Oh, almost done loading. Got the stops. Stop was a little too tight. It wicked it and rolled over. We might have missed that one, Carl G. While the chart was loading, here we go. Here's NASDAQ right now. Look at them hammering this. Look at them just hammering this market. Oops. Remember to take your stops, your targets out, stops out. Cancel all your orders. Cancel all those puppies. All right, let's get the Nazi chart up here. Let's see what's going on with old Nazaroo here. Man, that puppy, they are just slamming the techs. Huh. Yeah, Carl, we missed that. 6J. All right, let me ask the question before we rock and roll off of this chart. Where was the short entry on this chart? Either you can type in I see a couple of them. Okay, I see at least a couple trade entries short on this chart. You can type in a number, like a level over here. Here's all the levels right here. You can type in a number, or you can type in a time. I'm in California, it's all Pacific time. Type in a time and or a number. Where do you see short trades setting up on this chart? Short trades. Should we short it now? What do you think? What do you think? Any takers on that? Let's open this up. Put your live account up. Hit the short button. What do you think? Short it right now. It's tanking. We better get in. It's going to drop. We're going to miss it. Put the live account up there. Come on. Short it. No. Okay, we see some numbers coming in. Joe K. I got quite a few people want to take some shorts here. 1623, 4736. 42 was better. Kiss at 36. Good. Excellent. Let me circle back here and confirm what we're looking at. All right. This market started to really fall off the map when you had this little pause here. If you said anywhere around 1637 and a level of 4250, can you see this little box that formed above the mid-band with these blue bars right in here? See it? That was your short entry right there. No question about it. Everybody sees that one. That's a gimme. All these little rollovers were short entries. See them? See them? Kiss the mid-band, a little bit above the mid-band, rolled over. You'd still be in it now. I mean, you could still be in it now. But now it paused right here as you got this little bit of a pause, and it retraced up to line 2. could have boxed it or that was another chance. And then you had another little bit of a retracement right here to get short way over here. And this happened a few minutes ago. Carl, this might have been what you were referring to. Came up just shy of the mid-band, rolled over. Now, if this retraces, where might we take a short right now? We're retracement traders, right? We don't chase thrusts. So everybody who said to get in here now was correct. You don't chase the thrust. When the market is broken down, it's come into support levels, you don't short on the thrust. Yeah, you got to wait for a pullback. Where might we short this on a retracement? Where might it come to, and where might we short it if it does? Just type in a number. We'll take a vote from the team, and we will place orders there and see if they get filled. Ooh, a lot of numbers coming in. Mid-band. Between 2 and mid-band. 47.24 kiss from Joe K. 21.25 from Kenneth. 27 even out of Malawi. The odds at 21. A lot of 21s coming in. All right, so here's what we're going to do. We're gonna ladder the short sell orders in here at where everybody's saying to sell. We got quite a few at 21. We got a handful at like 22.50. Just go ahead and put them in here. 22.25, and then a ton of mid bands, which is sitting right at 23, like that. 21, 22, 21.25, some 23s, a lot of mid bands. Okay, let's ladder them in. Now here's the thing with these markets, and this is the healthy way to think about retracements, okay? And for you veterans, you've heard me say this 1,000 times over the years, is that we think of it as kind of an area, okay? We draw analogies to like pitching strike zones, right? Pitching strike zone is between the knees and the shoulders over the plate. The softball players, baseball players, of course, it's the strike zone. And generally the mid-band would be kind of right in the middle of it. So you could get shallow retracements that come up into 21. Mid-band retracements up near 23. And deeper retracements that might come up as far as 24. Now in reality, if this was a live market moving very quickly, we would not put resting orders here, okay, just to let everybody know. We're doing this for illustrative educational purposes and sim after hours, just to show, just to have a trade set up. Now here's what might happen here, okay? And this happens in markets, okay? It does, and it just happens. And you can't get too frustrated with it, is you might get a retracement that just comes just right to 20, and then she just falls off the map. If the sell programs are strong and they're kicking in, it just might rip this puppy down and never fill these orders. But what I wanted to say about in real time in the live room, the way we play this is we wait until the retracement, we see where the retracement has come to. And then we use our object trader and our other tools, our line tools, to get in. So in reality, we would not put orders like this, in a manner like that. Yeah, you would wait for a roll. That's right, James. And then you use your object trader tool to box it in, right, wherever it occurs. Whatever level it retraces to, we would use object trader to actually get in there. I'm going to put these on here just to see if we get a fill. All right, let's scoot this to the side. Tuck it in the corner. Anybody scanning the markets? What else is moving tonight? Gold, 6J, yen futures, Swissy, 6A, Aussie dollar. Let's tuck this off to the side. Stand by 1 second, please. Anybody gold? Anybody scanning the markets? Let's drag gold down here real quick and see if we have a trade. Okay, here's a gold chart. This is gold right now. I don't know. What would you say the trend is on gold right now? Looks like it's selling off. We want to be shorting this puppy. What do you think? Downtrend? Shorts selling short? What do you think? Uptrend? Are we buying? What are we doing here? Buying or selling? Buying or selling? It's in a range. Sometimes gold looks to run pretty smooth. It's, you know, Tom, it does. It's streaky. Yeah, it's streaky. You know, that's the funny thing about gold. It's like some other instruments. You know, sometimes it obeys the swing levels and it runs and does its thing, and then other times it's just a choppy mess. Okay, so yeah. Okay, so here's the deal. We're in an uptrend, and you can see that I'll drop something as simple as a simple trend line is really all you need to do. See that there's pretty clearly in an uptrend. However, you could also make the case that we are consolidating in somewhat of a tight range right now. Okay, we rolled over here at 20 and we're breaking support. We never got filled at 21. See the wick of that candle? Just wick 20 and rolled. How many of you want to buy a break up through 63? How many of you want to buy this pop? If it pops up through here, you want to get in? Anybody? Or would you rather get in here? All right, let me ask a third question. I'll do an A, B, and a C, and we'll take a vote from the team here tonight. How many of you want to buy this if it bips down and checks this one? Ooh, spooky. A, B, C. We'll take a vote. 12 seconds. A, breaks up here, you get long. B, breaks here, you get long. C, comes all the way down here and tries to bounce and fills you long. Trend is up, we're buying support. Trend is up, we are buying support. While you're pondering that thought, I'm going to go ahead and drag these sell orders down a little bit on NASI while you're thinking about your ABCs. Still waiting on a retracement for NASI to get in. A, B, or C. A, it breaks that swing to the upside. B, it breaks this swing to the upside. C, you wait for it to pull down in here and bounce to get long. Ooh, wow, I didn't expect that. Look at that. Ton of C votes. Holy cow. Okay. Dennis, Roger, Peter, David. Okay, we got a few B's sprinkled in and a few A's. Well, see, now that's, okay, I want to speak to this issue, okay, because I think this is something that's really challenging to a lot of traders when they see setups like this. Okay, let's talk about sort of the risk-return aspect of it. Clearly, I think we all would agree that if gold comes down and respects this swing down here and bounces, the superior entry long is without question down here, right? Because you're going to get a much better fill. And if it bounces here, you could, by the time you get up here to 63, be up as much as 12 ticks, yes? If you buy the bounce here. Now, let's talk about risk. The risk is that it could come plow right through here, filling you long, and just blow that right out, and then you're chasing it to get out. If, on the other hand, you want to see momentum continue to the upside, so what we're saying, just so everybody's clear, let me blow this up. This might be a little confusing for some of you. Gold has been in an uptrend, pulled back, held a mid-band, could not get back to the high, struggling to get back to the high, and now it's chopping in a range. The different entry techniques are as follows. If you voted A and B, what essentially you're saying is that you're going to look for a trend continuation to the upside, and you want to see momentum take the market up through these swings. That was the A and B vote. C, on the other hand, is quite different. C is saying that you are looking for it to return to this swing level and bounce. Many of you voted for C. And you want to see it come down here, and you're going to look to get long. That's why we have a buy order down. Okay, we just got filled. And you want to see at least get back up to the mid-band and higher. Yes? Okay, we're filled. We're filled short on NASDAQ. Everybody see this? We're long gold and we're long NASDAQ. I'm sorry. We just got filled long on gold. And we are short NASDAQ. We got filled on that contract right there. I had a contract sitting right there, and I got two more sitting right above it. Okay, let me ask a question. How many of you scalpy traders want to take profits now? Look, you got 5 ticks on NASI. What do you think? Take it? You got 2 ticks on gold. Scalpies? Any scalpy takers? No? Yes? Got a couple ticks in it. What do you think? Let me ask a different question. Yes, NASI? Take it? Stop to break even plus the tick, Eddie? Out of gold? How many of you would add? Let me do a flip side question for you here. Uh-oh. We talked about what gold could happen with gold, right? Could blow right through that support level and leave you stranded. Now here's another approach here. What if NASI comes back up? Do you want to sell more up here and add to your position? How about that? Add to it. Add at 21, Byron? All right, we're feeling some heat on gold. All right, we got takers. We got takers. We got some takers here on the add to the NASI position as it ladders up. We're getting hammered on gold there. What are we going to do? What do we do now? We got like a 2-tick bounce here, and then it plowed right through support. See, that was the risk of that, doing that. Truth be told, circling back on the gold trades, I want to voice my opinion on that. Okay, I would not have taken C. The predominant vote in the room was C, so that's why I left C on. But for me personally trading, I would not have taken C, and here's why. In my view, there was some weakness being shown, and we pointed it out when it happened, right? Here was the swing for the last thrust, right? Here was the swing that couldn't get back to it. Here was another swing that could not get back to it. In my view, this was starting to show you that that was weakening. Now, I might stand down and wind up eating crow. If this thing comes up and takes out that high, I'll totally be eating crow. But in my view, this is starting to look like a series of lower highs and lower lows getting put in here. You see this? See the ellipses, the predictors stair stepping down. You just got another one. Came right up here, hit it, trying to roll over. You could have dumped. I was just going to say that, BB. When you got that little spurt up, okay, that was your chance to get out. All right, I didn't do it. Give me a blindfold. Never add to a loser. Okay, I like that, Eddie. Eddie is strongly voting against. Okay, now look, we're married into NASI with 4 contracts short, which Eddie strongly did not want to do. Okay, many of you voted against this. Now we're short 4 from here. There might be a phantom bounce. You know, I don't know. I'm just simply analyzing the fact that in my view, with these swing levels that you saw right here, you know, I'm seeing a pattern of lower highs and lower lows. Now, just to be clear here, when you got this little bip up and you were a couple of ticks in the green, and I asked that question. I said, how many of you want to get out here? We were up a couple, 3, 4 ticks, remember? Just bip right up. If you're concerned about your entry and it's oscillating around it by a tick or 2, and you're afraid you're going to take a hit, you can go ahead and hit close. All right? You can just go ahead and close that trade out. Okay, we're getting feeling some heat on NASDAQ. Gold's coming back into play here. You think we got in a little too early on NASI? How many of you want to add more or put a stop up here? Close gold. All right, we'll take a vote. How many of you want to close gold? If you want to close gold, type in C for close. You're at break even. You're up 2 ticks, down 2 ticks, up 3 ticks, down 4 ticks. You can get out of break even right now. What's the vote? C, close gold right now. You want to take your chances it's going to come back up? Let me give you some other options. Let me give you some other options. How about we do this? How about if we stay in long and we put a stop under here? We're long, so we'll put a sell stop here. And if it bips up and checks this mid-band again, we're going to get out. So we'll put a sell stop right here, sell limit order right there. Ooh, a lot of C votes. Ooh, wow, Tom put in 5 C's. Okay, now if you do a quick risk return analysis on this trade right here, how does it look? Okay, we put your stop under the swing, your entry's right here, and your target is here. What's the risk return look like on that trade? In other words, the risk is the distance to your stop. If it gets your stop, that's your loss, right? If it goes up, it could hit your target. Your risk return is what? About 1 to 1. Now, when you think about trades that you want to take in the market, do you think 1 to 1? Oop, just plowed right through it. We're out. There's your answer. Okay, everybody, just in all fairness, to share information with the team, almost all of you unilaterally voted to get out of that trade the last time. Many of you wanted to close a long time ago. I left it on just to see what it would do. All right, now we're feeling some heat on this NASI thing. What are we going to do here? What do we do with this trade now? Because you know what? This can happen to you in the market sometimes. What the heck are we going to do with this thing? And I know, I saw the protests. I know you're telling me I told you so. A ton of you are saying I told you so. I know. In fact, this is one of the issues with, look at gold drop now. Good thing we got out of that, huh? Hey, by the way, I just want to share this. This is a very important thing before we look at NASI here. Do you see how we put a stop in here and how we got out? Now, look, if you had left that trade on and didn't get your stop in, ooh, you'd be hammered right now, huh? When you put stops in, and you got to respect your stops. You've got to respect your stops, okay? Just don't ever move your stops. If you analyze swing levels and you put stops in, and that's where you want those stops, leave them there. Because if you don't, I'm telling you, or you don't put a stop in, it can run against you. You have a couple contracts on a $10 instrument, you can get slam-a-rooskied. Right? Slam-a-rooskied. Now, in actuality, going back to NASDAQ here, okay, we got out of gold and we know why. The better entrance on here was to patiently wait for it to come up near the midband. We all see that, right? So you would have been filled up closer to this 22 level. Okay, now we're still stuck with this short. We were trading in the direction of the trend. Ed said to short gold. I know, we could have flipped it. We did the analysis in real time. We could see that we had a series of higher lows, lower highs and lower lows. It was turning from an uptrend to a downtrend. Instead of having a stop here, there was a suggestion in the room to flip it short here. Just take the position, get out of the long, and flip it short. And if you did that, you'd be up nicely. Let's go back to NASDAQ. Excuse me. We've got to get some targets and stops in. Where do we want to start putting some targets in? How about let's start peeling one. We're short, so we want to buy it back, right? How about you want to take one out here? You want to take another one out here above that swing. We're fading the swings. Let's get the gold out of the way. Kind of confusing things a little bit here. Coming back to our entry. Let's go ahead and get a little more aggressive with our exits. Let's peel one there, one there. Let's take another one off here. Come on. We're fading the bottom. We're laddering out, and we'll leave one runner on down here. Okay, everybody see that? Okay, we're out of one. See that? Just popped it. Let's talk about stops. Let me blow up the NASDAQ chart. Can everybody see the NASI chart clearly right now? NASDAQ chart clearly. We popped out of one. We already banked coin on one. We're laddering our way out of the 4 contracts. We had 4 on. We took one. We got another one here. We're fading this swing, and we'll leave one runner on right there. See it? Now, we need a buy stop for our protective stop for the remaining 3 contracts. We have several places we can put it. We can put it above the entry, A, B below the entry here. A above it. Just peeled another one. 2 out of 2. So take it down to 2 on the stop. Quick vote, 10 seconds, above or below, A or B, A or B, above or below. Where are we going to put our stops? A is above, B is below. It's coming down to target number 3. We're fading the swing. The runner is located down here. A above, B below. A above on the 2 contracts remaining from the 4, B below. A lot of B's. Ooh, a ton of B's. Couple of A's. Couple of A's. Who's doing the A's? Tom, Philip, or A's. BBB's across the board. A ton of B's. Jacobo with an A. All right, now, we all realize what we're talking about here. Let me just be clear about this when we're talking. We're short, we're buying it back. If you put the buy stop above the entry level on the short, if it comes up here and goes up above your level, you will take a small loss. Okay? If you put it below the level, you will lock in gains. So we've already nailed 2 targets, bip, bip. We have 2 left on. We want to go below the entry level. That's what we call a free trade. A free trade means that you have hit scalper targets, which we did, right? And that if we come back up close to the entry, it's going to get that next target. Boom. Okay, we're down to 1. Everybody see how we scalped that? Everybody see that? We got 1 left on. You always want to go below. That gives you your free trade. That gives you your free trade. We got a free trade on now. We've hit 3 targets, and we got 1 left, and we can go for the runner. Now, I would vote to go ahead and, if we get anywhere near this swing, I'm going to take this trailing stop to a close above that candle right there. Now you got a free trade on. You hit 3 targets and you got a free trade on. Everybody see how we did that? Including the fact that we got in, now it's a really super tight stop. It might bip it. I don't care. So when we say in the room tight stops and you see those numbers, that's what we're referring to. You're going to go really tight right at the stealth, line 2, line 6. You can go close. You can go 1 tick more if you want. If you want to get the top of that candle, just let it wick it. See where it is? See where line 2 and stealth is, and that candle right there. This is sort of when you're looking at the trail stops. There's a little bit of finesse to it. It's a little bit of how would you say, technical expertise and a little bit of feel. There's a little feel to it. You know, sometimes, and it really depends on the instrument, okay? You know the Russell is different than oil, right? YM is different than NASDAQ. They're all a little bit different. So that's why it's really important as you learn and you ramp up to speed on this. You want to just go into Sim, you know, take the tools, get your NinjaTrader platform, get your charts all set up, and then just play with the different instruments. You might like YM, maybe you don't like YM. You try NASDAQ, it works perfect for you. You try crude oil, just can't seem to get it down. You switch over, you try the Russell. Russell fits perfectly. It's like finding a good friend or partner or mate, right? You just got to get that perfect balance where they're stepping and jigging and jagging, so are you. It's like a dance. So, you know, most of you know, of course, that I trade NASDAQ and YM pretty heavily, very heavily actually. And I've just over the years developed a pretty good trading relationship with them. I have a feel for them almost now. I'm not, you know, every morning I get up, I'm not wondering what I'm going to trade. I know exactly what I'm going to trade, and I know how I'm going to trade it. And you want to get to that comfort level. Now, let's do this just to see how this works here. Okay, we're going to box this puppy tight. So when you do this, we're fading that swing at 16.25 by 2 ticks. We've tightly boxed the rest of the trade in. What's going to happen here is it's either going to bip up, catch our stop, we'll be out with the remaining 1 contract, yes, or it will bip down and take out this swing and touch this area and get us out. For a beginner with 10K in capital, what instrument would you suggest? NASDAQ, YM, or to start with? Rick, by the way, just a quick comment. I see some of you coming very late here. This is crowd target. Well, I sort of helped it along. We were short 4, David D. I'm crowding the target because of this. At this point in time, let me explain my thinking here. First of all, it's after hours. We don't know how much movement we're really going to get, right? The reality of it plowing through here and giving us another 20 ticks, I put that very low, at a very low likelihood. And so that's why the notion of having a runner way down here, probably not going to get filled. If you wanted to really get out, you got to fade the bottom like that. We already felt some heat on the trade. When the trade moved against us up to the mid-band where we really should have got in, right? We already felt some heat, and I don't want to feel heat anymore. So you have several choices. See, as these bars form, as it goes like little tiny sort of micro thrusts, down, down, a little bit up, down, a little bit up, down, a little bit up. In actuality, if you had been tracking that down, you would have been already out here or here. I'm leaving this a little looser for illustrative purposes. In actuality, I'd probably already be out of this trade. Okay, I would have faded the bottom down here and be out either here or with a super tight stop there. But let's just box it in real tight. But that's the thinking behind it. Back to your question on 10K. 10K Minaj is a little bit larger account. We were saying for accounts that are, while we're watching this, let me just type it in here. So it's, okay, we got it. We're out. Let me just go ahead and type in, since we did want to talk about nominally sized accounts and we want to talk about risk management and risk control. Let's just put some parameters in here real quick so we're all on the same page. So if you have a 5K account, you never want to risk not risk more than 3 to 3.5% of your account in any given trading session. 3.5% in any session, trading session, whether that's at night. So you can do the math. Okay, that's about $150 to $200. You don't want to lose more. Seeing on my stop was pretty tight. Watch it bip and roll over. It's all right. $150 to $200 in any given trading session. And so just let me be clear, explicitly clear about what we're talking about here. Gold charts moving. We'll circle back to that, Tom. Okay, I just want to get some quick risk parameters up for the team to consider here. All right, and so most stops tend to be somewhere in the 10 to 12 tick area on average. Some are tighter, some are looser. Just use that as a round number. So you can do the math here. On a $5 instrument, like YM and NASDAQ, $5 per tick, your average stop loss is going to be $50 to $60, yes? So in other words, if you take a trade and it takes a full stop out on a $5 instrument with a 10 to 12 tick stop, each trade that you got popped on, you'd lose roughly $50 to $60. So if your total stop loss for the day is 150 to 200 and you have to stop, how many losses could you take with this scenario right here? How many stop losses before you're done that you're stopped out for the day? How many trades? In other words, you didn't have any winners, all losers, and you took 3 full, how many stop outs? How many full stop outs? 3. Yeah, 3 to 4, roughly. And that's good. Three to 4 trades, depending on the actual trades, of losses with no winners would be a full stop out for the day. You would have to stop. We call that a stop out. No winners. You took 3 to 4 pops. Boom, boom, boom. All full stop outs for the full 10 to 12 ticks with no winners in between. You would be stopped out for the day with a $5,000 account in that scenario, trading $5 tick instruments. Dollar index, YM, NASDAQ would fall into those categories. Now let's do this a little bit differently. What if you doubled these numbers? What if you doubled the risk side but kept the account size at 5K? Should the trader with 5K or less in their trading account be trading a $10 instrument? Well, let's do the math. If the stop loss was 10 to 12 ticks at $10 a tick, each pop would be 100 to 120. If you took a pop, right, and I'm talking about one contract here. I'm not talking about two contracts. Two contracts would double everything, yes? Let's go ahead and play this scenario out so we're all clear about this. I don't want anybody any confusion about this. So with stops at 10 to 12 ticks with a 10 tick instrument, now each pop is going to equal $100 to $120 per contract, yes? How many pops would you be able to take with a $10 instrument with a $5,000 contract? I mean, a $5,000 account at $10 a tick. One, maybe two. Because if you got popped for, say, that $120 loss on a 10-tick instrument is almost right at your max loss for the day. So somebody with a $5,000 account or less, should they be trading $10 tech instruments like crude oil and the Russell and ES at $12.50 a tick? Should those traders be trading $10 instruments? Yes or no? Based on the numbers that we have here. Look at that rollover on NASDAQ. You know, I had that stop right there. Does anybody remember that? Just one tick too tight. It nicked me by like a tick right there and it rolled over and it's getting a fresh swing low. Look at that. No, there's your answer. Okay, this is really and I don't have any contention against any instruments. I like all the instruments. I trade a lot of different instruments. I've learned over the years, you know, that's the way you do it. And, you know, I'm just trying to do the math here. This is the math. A lot of people don't want to talk about the math. They don't want to calculate all this stuff. This is too much work. You know, what I'm showing you right now is what's going to keep you in the business. This is going to keep you in the business right here. Okay. Risk management is the center. Aside from instrument selection, trade entry techniques, and risk management are your top three things. That's your top three things right there. You could be a great trader with a smaller account, but you trade crude oil, you get whack-a-mole around, you take a couple of $500 pops, boom, boom, boom. Next thing you know, 20% of your account is gone. Is that prudent risk management? No. No. Now, back to your question, Minaj. If you had 10,000 in an account, you can double these numbers, right? So 3.5% to you would be $300 to $350. Now, would somebody with 10,000 or more, 15, 20, 25 plus thousand in an account, could they trade $10 tick instruments? $10,000 or more in an account, can you trade $10 tick instruments? 10K or more. Look at that drop. Look at that roll and that drop. We were a little short-sighted on that puppy. Should have left him looser. Who asked about the tight targets? Somebody asked me about that. Yeah, it was too tight, no question about it. I was off there. Somebody said there was a mid-band roll on gold and then 40 ticks straight down. Oh, it did come back. Who said that? BB, you're right. You're right. Here's where we stopped out of our long and it flipped and it came right back up. Look at that. There was a perfect roll right there. I was too busy yakking about risk control. My apologies, everybody. Look at that. Good call, BB. Right to the mid-band and rolled perfectly. Look at that. Nice trade. Nice call. Nice trade. And the NASI, we had the stops too tight and the targets too stopped. Look at that. I really missed the call on that one. A little too tight. Any questions on risk management? It really comes down to the size of your trading account. Excuse me. Hold on a second. The size of your trading account has a lot to do with risk management and which instruments you should trade. Smaller accounts, you can see you want the $5 instruments. if you get a little bit larger account, or you build it up from smaller, say at a smaller account, you build it up to 10, and you want to graduate up and start trading $10 tick instruments, you could do it, but that's also a function of your ability to take those trades. So what I'm saying, just to be clear about that, is if you cut your teeth on NASDAQ and YM and you get a good feel and you make money on those, you start building your account up a little bit, does that necessarily mean you should switch to crude? Not necessarily, right? Not necessarily, because what we're saying though is that from a dollar risk standpoint with the larger account, you could trade crude oil, but does that mean that you're in sync with the way crude oil trades? Is crude oil going to trade like YM? Probably not, right? So while dollar-wise you can afford to do it from a risk standpoint, from a trading standpoint, in terms of managing entries and stops and techniques with the price action it has, you might not necessarily want to shift. That's the trade-offs. Back at the mid-band on gold. You gold traders, just trying to roll over here. That's your short setup right there, right? Right at the mid-band. Hey, listen, I need to close out here. I went a little bit over. Thanks for coming, everybody. That's exactly here. Before I close out, I want to say that you would increase the contract size. That's right. That's right. Doug, James, Jacobo. That's exactly what you would do. You would simply increase your contract amount. So what we're saying here is this: you would not necessarily trade over to a $10 instrument if your account was larger. You can learn on the $5 instruments, and then if you're trading 1, go to 2. If you're trading 2, go to 3 or 4. You increase your risk in a different way, trading an instrument you're familiar with until you work up to where you're trading, 10, 15 contracts at a clip. But you're still trading the same instrument because that's the one you're familiar with. That makes sense? All right. Thanks, David D. Great webinar. Appreciate everything.